Good afternoon, traders. I hope everyone is having a wonderful day. Excuse my voice, I'm a little bit under the weather, but I do want to take the time to make this video to point out a pattern in the small cap index that is going to help us identify a bottom in the stock market. So what we're looking at is the ETF that tracks the Russell 2000, the small cap index. This is the ticker symbol IWM, and we're looking at a weekly chart from the bottom of 2009 through today. Okay, so if you haven't already seen it, I do want to point out to you that the long-term uptrend has been broken to the downside. So, and we're going to draw this in two different ways. The very first thing is let's actually draw a channel from this high here. This is, I don't have my Elliott wave labels up, but this would be a proposed wave 1. We're going to connect wave 1 through the end of wave 3 and then project a parallel line from the terminating point of wave 2. Now this gives us a parallel channel that in a bull market, in a healthy bull market, this should be respected to some degree and continue moving higher. This is this lower trend line can be used as a pivot point for reversals. Okay, and you can see here that we have a material break of this trend line. Now, the other way we can draw this is to simply draw a traditional trend line connecting the bottom points. From we can start from the bottom of 2009 through the end of the 2011 correction, extend that forward. Okay, so either way, there is no wrong way. Remember, technical analysis, fundamental analysis, really there's leeway in how we can do things. Now, both of these, either which way you draw it, is showing us that this is a break and it is a loss of confidence. This really does break the chart in a lot of ways. Not to mention, we've also dropped below the 200-week moving average here in blue, which is currently coming in at 105.10. Now, let's zoom in and take a look at the pattern here from an Elliott wave perspective in order to find a potential bottom here or not. So we're looking at the daily chart. Let's actually zoom in a little bit further over to the 4-hour chart. This will do just fine. Now, from the very top, the all-time high put in on the market, we had this complex correction. It was almost an impulse wave, and by that I mean this could have been 1, 2, 3, 4, and 5. But if you're nitpicky, it's really not an impulse wave. The reason is this decline here counts best as a 3, as sharp as it may be, and proposed wave 4 ever so slightly enters the price territory of leading diagonal wave 1. Either way, we knew even if it wasn't an impulse wave, this is still only the first leg of a larger ABC correction. Okay, so this was wave A, wave B, and we are working lower in wave C. Now, whether this was supposed to be a zigzag or a flat correction, they both have C waves. C waves are always 5 waves. And the issue with the Russell is that we only have a 3-wave structure so far. So this counts best as a wave 1, 2, 3, and this sets us up for a retest of the underside of either of these trend lines here, long-term trend lines, before we move lower in wave 5 to then complete a larger ABC. Now the small cap index has been pressuring to the downside, relatively speaking, to the other indexes. So what I'm looking for here is I'm analyzing the week index in order to identify a bottom or a completed pattern. Once I can count a bottom in the weak names, I want to start buying the stronger names. And so that's why intermarket analysis is very important, because it gives us a grasp of where our money should be. There's a potential that this is going to play catch up, but that's, introducing risk, and it's assuming that the small cap index is going to play catch up, say, to the S&P 500. So if I can identify an ending pattern here, say a fifth wave, let's actually zoom back out and find a target for that. Let's just do a very simple Fibonacci analysis from the 2011 low. Okay, this could go to 94 if we're going to retrace 50% of the rally from the 2011 low. It's not necessarily required, but that target is certainly there. And conveniently, it does sit along a level which was previously resistance and then became support. So this is a real number here, 94.60, call it 95. I'm not forecasting that it's going to go there. I would rather see a bounce first, and then we can expect a fifth wave lower. And this is not a call to buy either for a retest of the underside or for a sell downward to 94.60. This is simply a study to show you how intermarket analysis can help us identify where our money should be. We should always be in relative strength. So hopefully this helps. I don't think we are at a bottom just yet, even though today is the market has been oversold. I have been somewhat bullish for the past week, and that has proven to be wrong. So I'm kind of taking a step back, looking at the bigger picture, and this pattern really jumps out at me. The incomplete impulse wave to the downside. Okay, actually, if you look over here, where I have the ETFs that track the major indices, the S&P is up 0.8, the Dow close to 1%, the NASDAQ 100 0.8, and the IWM flat. And so the relative weakness continues with the small cap index. I want to see this bottom out before anything. The small caps really represent risk appetite. Most of the time, they don't have, from a fundamental perspective, they don't have earnings. They have bad fundamentals. It's just a higher risk profile. So we want to see the animal spirits come back in here. We want to see investors turn bullish. We want to see investors turn into gamblers. Okay, because that's really, a lot of times that's really the personality of traders. So until money starts to flow into riskier assets, be careful. And so this is an incomplete impulse wave. We're looking for a retest to either back to 102, which is a 38.2% Fibonacci retracement level from the 2011 low, or one of these, the underside of one of these trend lines. Take your pick. It's really anyone's guess. If you want to zoom in a little bit, narrow it down, we can say that if wave 4 is to retest the 38% retracement of this wave 3, that comes in at 105 conveniently towards the upper trend line. And from there, depending on how the pattern unfolds, I'm assuming it's going to be a 3-wave structure. Then we can look forward to a new leg down. So once again, this video is getting a little bit long and I'm rambling a little bit. But until the weak index bottoms, the stronger names are not safe. A bottom may not be in across the board. So that's it for now. If you guys have any questions or comments, please leave them below in the comments section or hit me up on Twitter at FutureMeDead. Best of luck.